Welcome to Realcast, the weekly roundup of the real asset markets. I'm joined this week as ever by Paul Strome, Nicole Dines and Dan Innes. And of course, we saw the Bank of England raise interest rates as expected from last week, as well as, of course, Pacific Western seeing its share price drop 30%. So the banking crisis still kind of rolling through a little bit there in the US. Dan, what have you been tracking over the week?
Well, on Friday, the FT ran an interesting story about stranded assets. They were talking about the malaise that's facing UK commercial property investors, and specifically office vacancies, where vacancy rates are now at 9%, which is the highest rate for nearly 10 years. But it's of course been difficult to see the triggers with office vacancies, with flexible working habits that are now pretty much the norm. Figures by CoStar were part of that article. They revealed that 2/3 of vacant office space is more than 20 years old in the UK, which ignited all of that whole debate again about conversion to resi, obsolescence, all of that type of thing. That will undoubtedly be a big topic of conversation at UKREIIF this week up in Leeds. The Mayor of West Yorkshire, Tracy Brabin, is going to be leading a delegation there, where she said, the devolution of her council in that region and the powers funding it need to be changed dramatically. So expect to see a lot of politics coming out of Leeds and UKREIIF this week. In terms of office space and appetite for offices, there are still people investing back into offices. Nordic private equity firm NREP, they went into the Norwegian office market for the first time with the acquisition of 2 properties from Entra for 1.5 billion Swedish krona. That's about 130 million euros. They bought in Akersgata and Tordenskjoldsgate in the centre of Oslo, and they're planning to invest to raise their sustainability credentials. That was CBRE brokering that deal. And back to a residential theme I've been following. Property Week reported that the Middle Eastern alternative investment manager Rasmala Investment Bank, they're planning to build a resi portfolio in the UK with an investment value of more than $2 billion, just over £1.5 billion in a 5-year UK multifamily strategy. So interesting entrance into the market. Cityscape Global launched its major event of the year to be held in Saudi Arabia for the first time. And that event's going to be in early September for all asset classes operating internationally. And lastly, back to Saudi Arabia again, and the Saudi Entertainment Ventures, affectionately known as Seven, they've signed a deal with Hasbro, Richard, to bring the Transformers ride-based attractions to some of its destinations.
Always good, Dan, to have another place to travel to. I will also be at UKREIIF actually on Thursdays, and also we'll feed back on that a little bit in next week's issue of Realcast. Paul, what have you been tracking in terms of the news line?
One interesting story is that CEE investment volumes have declined by 57% in the first quarter of 2023 compared to the corresponding quarter in 2022. That's according to Colliers, which published the latest edition of its report, the CEE Investment Scene. The result was marginally better than European results, which revealed a decrease of 62%. The firm said that predicting market activity for the remainder of the year is challenging, but it could reach 5 billion to 6 billion euros if it maintains its current trajectory. Volumes across CEE were some of the lowest levels recorded since the global financial crisis, according to Regional Director of Capital Markets for CEE, Kevin Turpin. Poland secured half of Q1 volumes, followed by Czech Republic with 31%. Turpin said that as long as an external event does not cause a material reduction of economic activity, CEE can be expected to continue to outgrow Western markets in the long term. Then moving on to a report from Knight Frank, tertiary education institutions have been expanding space in London at an unprecedented space over the past year. They are currently searching for almost 500,000 square feet of space, the highest ever on record. The expansion is due to growing student numbers and the need for different campus models. London's university student population grew by 8% in 2022. Take-up has been almost 20% above the annual long-term trend. The largest deal of Q1 was the University of Teesside leasing nearly 27,000 square feet at Stratford's Innovation and Technology Business Park, called Here East, as its new London campus. Over half of the education take-up over the past year has been in East London's submarkets. The arrival of the Elizabeth line has also contributed to that. Knight Frank said that the concentration of institutions in East London submarkets also reflects a strategy to co-locate in knowledge clusters alongside other public and private sector companies to foster partnership opportunities. Also in the UK, London headquartered developer investor General Projects and investment management company Neo Capital have jointly acquired Liverpool's Royal Albert Dock from CBRE Investment Management for about £40 million. CBRE IM put the asset up for sale in July last year with an asking price of 49.2 million. The dock, which was built in 1846, is the largest single collection of Grade 1 listed buildings in England, and it's a mixed-use asset which has got restaurants, bars, shops, a couple of hotels and offices for small businesses.
Yeah, interesting, Paul. And also, of course, we'll be in Warsaw for the CEE summit at the end of June. So it'll be interesting to look at some of those opportunities and the potential for growth there in CEE markets. I also noticed in the newsline on the logistics side, Buck Consultants putting out a new report that industrial space demand is likely to surge because of the boom in electric vehicle batteries, production for that. So that will be interesting to track. That was also published whilst we were at Transport and Logistics. And we were there with a really interesting panel looking at the future of logistics. And of course, we had CTP, Cushman & Wakefield, Swiss Life Asset Managers, Garber, Verdian and Zalando. So really interesting set of speakers. And one of the key things that came through very strongly was sustainability, but also that logistics, and particularly logistics, real estate is beginning to cross over into becoming also around energy production. And so, a real change of what's required in terms of sites going forward and how much that may influence both the real estate side and the real investment side as well. Nicole, we were also tracking France this week.
Yes, Real Asset Media held a briefing on France in London at Taylor Wessing's offices in the city. Serge Bacunier of Berlin HIP said transactions have dropped. We've seen a sort of real standstill period, which is the case as we've seen in most countries. But there's a lot of hope that things are going to be turned around. In particular, Alfred Fink of Taylor Wessing said that the positive thing is that international investors, especially from Asia, are coming back after a lull. South Koreans have been investing heavily in France, especially in Paris, with a local partner, Amundi, and Middle Eastern investors as well, and investors from Israeli. For example, one of the things that's attracting investors is that the luxury side, whether it's residential or retail, has really come, and hospitality has really come back with a vengeance. So everyone has talked about an increasing polarization in the market that goes across sectors. So high-end offices in the central Paris are in great demand, and prices keep going up. And as I was saying, hospitality has come back. Dubai Holdings recently bought for 650 million euros the Westin Palace Vendôme Hotel. So 5-star hotels in great demand. The Golden Triangle in Paris of retail, hospitality, and resi. It's going. Prices are going through the roof. They said. So this is increasing polarization in the market between the high end and obviously the ESG compliant assets as well, and the rest of the market. And there are more, as Dan was saying, stranded assets is a word that we hear more and more. I actually agree that there is life outside Paris, especially in logistics, which is obviously across the country, even down to places like Marseille, and in senior housing, which was mentioned as a growth sector. But Paris still very much dominates, no surprise there. I mean, of the 6.9 billion euros of investment of the volumes in the first 3 months of the year, 5.3 were in Paris.
Yeah, I thought it was interesting as well, going back to what you were saying, Dan, in terms of the office markets there and stranded assets, that a major challenge there, particularly in France, was zoning. So that although these assets are potentially going to be stranded, that actually there's no real desire from the local authority to be able to change that. That could be something of a challenge across Europe, I think, for some of those areas. Thank you, Dan. Thank you, Nicole. Thank you, Paul. And look forward to seeing you next week for our regular roundup of the real asset markets.